Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host, flying solo, but I have a great guest, Tone Vays, a repeat guest, and a popular technical analysis guru. He is a trading teacher, a content creator, and a conference organizer. His website is 𝗀𝗏𝗄𝑦𝗠.com. Welcome back to the show.
Thanks, man. I re-listened to that podcast from 3.5 or 4 years ago, and it was great to go back to see what I said.
Yeah. Before we get into today's topic, which I want to assess the merits of altcoins, or lack thereof in your view maybe, how have your own views evolved in the last 3.5 years? Almost 4 years now.
Ironically, my views have not evolved at all.
Is that a good thing? Yeah.
I think it's a good thing. I'm consistent. So many people around me have decided to go start their own altcoins, and they're promoting all kinds of stuff. And I've been very consistent. The position that I took starting in early 2015 is the same position I have today. I will say I grossly miscalculated the FOMO and the irrationality of people, kind of like the tulip bubble, where you're like, this makes no sense at all, but people keep rushing in until it eventually implodes. So I call the 𝗵𝗵𝗁 debacle perfectly accurate, even though that took a couple of years. But the Ethereum one is still with us. So I was never, I also spoke critically about Ethereum back then, and we're talking late 2016, when Ethereum was still like maximum $20 range or something. And I thought Ethereum was a ridiculous project that was not going to last for the long term. And Ethereum is still with us. I think it's around $300 or $400 today. It went as high as 1,600. But we're all waiting for the day Ethereum stops functioning, because it's just, it's not scalable, and it has competition, and there's still lots of problems with it that have not fully been realized, while many other projects have come and gone since 2016.
Yeah, it is fascinating what has happened. And because we recorded that interview prior to the big peak in Bitcoin or cryptocurrencies, which was, I think, late in 2017, so 1 year after speaking. Now, this is where I really want, when I was thinking about this show, I thought, what is the topic that Tone can address greatly? And since you are a critic of many altcoins, I said, my thought was how to spot a shitcoin or how to spot an imposter. And you have a beautiful one-liner about this. So what's your take on that?
Yeah, basically in the crypto space, it's very, very simple. If it's not Bitcoin, and let's say 12 or a 13-year-old can invest in it, it's a shitcoin, and it's an imposter, and it's probably a scam coin. They shouldn't exist. And it all comes about because people just can't respect. I don't want to say understand, because enough people understand what Bitcoin is, but they go and make their own copycats. Enough people just don't want to admit that they did not become a multi-millionaire by buying into Bitcoin early enough. And in order for them to now become richer, they have to invent their own money. And that's all it is. So anything in the crypto space that isn't Bitcoin, that tries to sell you some kind of a token, and it's actually illegal for them to blatantly tell you, buy this and you will make money because the value will rise. There's laws against that. So they have to, go beat around the bush. They can't tell you to buy into this token as an investment unless they have cleared it with the regulators, and they filed the paperwork, and they're actually offering a security. But if they're offering a security, that security needs to be, traded on a regulated platform, which Ethereum isn't. So So that's the dilemma. So anything that you can just buy and potentially make money on outside of regulated space is someone's attempt to either print their own money or get around security laws by funding their company. Now, they can tell you all kinds of stories as to why you should be funding their company and why they're the people to do it, but they need money. So they're selling you this digital token for you to fund them with your expectation to get out and make money. Now, in some of these cases, you buy into the token and no one ever lost money. Like we can look at the Binance token, for example, that's funding their exchange. There are a few others. But to me, they still, they tried to get around security laws because they needed money. So it's either you print money, you create an unlicensed, unregistered security, or in most cases, you're doing both. You are creating quasi-money and quasi-security.
Do you have no patience or sympathy with the argument that people should not have to go through regulated securities markets?
I did for a small amount of time, but very small.
Yeah.
But after I realized that 99% of the tokens in the crypto space are blatant scams, I completely understand the need for those security laws.
Well, okay. And just before the show, I wrote down a few of let's say the most prominent concerns with Bitcoin and why we might think that it has not had the traction or use that we would like to see. One is price instability. The other is delays or costs of transactions, particularly microtransactions or small transactions, and then concerns about privacy and security. And your view, is that these are all misnomers, or they're just misunderstandings?
Yes. So basically, if you are concerned about Bitcoin's price stability, then you should be using the US dollar. It's that simple. So when a lot of people come up with their altcoin that says it does X better than Bitcoin, but there's always a Y that does it even better. So when someone says, well, it's much cheaper to transfer my currency, and my answer is, yeah, but it's a lot cheaper to transfer on PayPal. It's free. I can send, I can use PayPal and send dollars to anyone else, and it's completely free. So you're not competing. Bitcoin isn't competing with anything on the cost of transactions, on speed of transactions. It's not even competing on privacy. It's not competing on that. It's competing on the immutability of the transaction. It's competing on the following three principles. And these are the three key principles I always try to pitch Bitcoin with. So principle number one is unconfiscatability. So Bitcoin is the first asset humans have ever owned that is unconfiscatable. If you properly protect it in your head, no one knows you have it and no one can take it away from you. That's number one. Number two is its censorship-resistant value transfer. I can send Bitcoin to you, and after a little bit of time, a few confirmations, that's Bitcoin security, you know that you have it. And there's no one in between, and no one can stop that. And the third principle is Bitcoin is sound money. There will only be 21 million Bitcoins. And the decentralized nature of Bitcoin makes sure that there will only be 21 million Bitcoin. That is Bitcoin's value proposition. And it does all those three things incredibly well. Any other project that claims that they can do something better, and it's usually in the realm of we're faster, we're more private, we're cheaper, it's at the cost of all of those features. You may be faster and cheaper, but if enough people start using it, you're going to realize how centralized you are. Like, you don't have the trust. You're not a store of value because of that. So they're all competing basically for someone else to sell it to someone else and try to profit from it. They will not last in the long term because they do not have the security and the trust of the general public that the key features, those three features, will be intact in the future. And that's not something you can prove. That is only something people have to agree to.
How do you respond to top economists, free banking economists such as Larry White, who expressed concerns that in fact the sound money case, which you mentioned of having the 21 million, that we have this cap, can actually be a vulnerability that actually increases the price volatility?
Well, it may increase the price volatility in the short term, but we have to define price volatility. Back in 2011, 2012, buying a cup of coffee was very volatile because one Bitcoin was about $1. And it was fluctuating 10, 20%. But today, buying a cup of coffee is not volatile. So if Bitcoin falls, right now it's around 11,500, so 11,500. If Bitcoin fell 10% tomorrow down to $10,000, you paying $5 for a cup of coffee will not change if you're paying in Bitcoin. The price of that coffee will change by a penny or two. But over time, Bitcoin is designed so that over time, its value needs to increase because as more and more people use Bitcoin, and this week there was an announcement, MicroStrategy, a company, decided to use $250 million of their excess cash to just buy Bitcoin and hold it. So as more and more Bitcoin gets adopted, as more and more Bitcoin gets bought by these big companies as a hedge against all the crazy economics that was brought on by money printing, the value of Bitcoin is expected to rise. And that means incrementally larger and larger purchases become less and less volatile. Right now, it's probably a little volatile to buy your car with Bitcoin. You go on the wrong day and you're going to see a difference in the price of your car. But but hopefully in 10 years, when one Bitcoin has a chance to be hundreds of thousands of dollars, if not $1 million, and we're not going to be talking about the price of a Bitcoin. We're going to be talking about the price of the lowest unit of Bitcoin, which is a Satoshi. You walk into a shop to buy a $30,000 car, and it's not going to matter if the price of Bitcoin moved by 5%, because the purchase of that car will not matter when you're holding Bitcoin.
Why do you believe more than 10 years on from the introduction of Bitcoin, then it's still people still largely hold it as a speculative vehicle rather than as a medium of exchange or even a store of wealth?
So 10 years is actually not a lot. I know we want things to be fast. But how long did it take for Netflix to come out after we already had the internet? So it probably took over 10 years. So things don't move incredibly fast, and Bitcoin doesn't have a central entity to promote it. It depends on people like me doing it voluntarily. This is where all of these altcoins in the crypto space have a huge advantage because they are all dependent on promotion. And someone is incentivized to promote that coin, especially the creator of that coin. So it does take long to spread around. Now, Bitcoin as a medium of exchange is not as important as Bitcoin as a store of value. Now, I would say the majority of the people are holding, when you say holding for speculation, I don't really think most people are holding it for speculation. To me, speculation is short term. Speculation is what traders do. When I trade, I speculate. So anyone that's holding an altcoin, even Ethereum, they're probably speculating. But most people hold Bitcoin as a long-term investment and also use it as its value goes up. So I don't want to talk about myself, but the company that just bought $250 million worth of Bitcoin, they bought it for the next 10 years. They didn't buy it for speculation. They bought it to protect their excess cash. And that's a long-term position. Now, if the price of Bitcoin happens to rise 300-400% in the next 2 years, I can see them liquidating a big chunk of that position. And if they feel that it has gone into a bubble, they may even liquidate their entire position. However, the reason for most people buying and holding Bitcoin is not for speculation. It's for, or they realize real quick that they might have bought it for speculation, but once they realize the value of it, they're holding it for the long term. If it goes up really quickly, then you have to decide, if it goes up too quick, it may crash really quick. Maybe I should get out earlier. But if it goes up slow and steady, there's absolutely no reason to get rid of it. And hopefully one day we are all going to be using it. Bitcoin adoption as a medium of exchange rises as Bitcoin's store of value rises and increases. So one is clearly more important than the other.
The Gold Newsletter podcast is proudly sponsored by the Discovery Group of Exploration and Development Companies. To learn more about our exceptional track record and exciting future, visit discoverygroup.ca.
Hi, I'm Brian London, and I'm here with the Discovery Group CEO podcast. As you know, Discovery Group sponsors the Gold Newsletter podcast, and I'm here with Chris Taylor, CEO and founder of Great Bear Resources. Gold Newsletter readers don't need to be introduced to Great Bear. It's been one of the biggest success stories in the history of our newsletter, which is saying a lot because there's been some tremendous success stories. But Chris, there's a lot more ahead and a lot more potential. And I don't think the world and in our audience really appreciates that. So what I'd like to do with you today is kind of explore where that potential is coming. Your last news release, wow, what a blockbuster. Tremendous gold grades over great widths and starting at bedrock surface, which is something that I don't think has been realized or emphasized enough to the market. Can you explain what this means in your how it helps you in your new understanding of the high grade zone?
Yeah, thanks, Brian. There's a little point of frustration with me when I hear the community say, well, a great discovery at Great Bear, the Dixie project, it's obviously going to be a significant mineral resource and looks like a big mine is coming, et cetera, et cetera. And then in the same breath, they say, well, the LP fault target, it's big, but it's low grade. And the numbers that we just put out, I think it averaged about 80 grams over about 10 meters, bedrock surface. Those are clearly not, low grade numbers. And, when I read the analyst sort of consensus about Great Bear, some of them are thinking, like the LP fault, for instance, is a sub-gram kind of resource, like a detour lake or maybe similar to a Canadian Malarctic. But we're consistently putting out these high grade numbers, and the last number of news releases that we've had over months have all had high grade material. We're frequently seeing hundreds of grams, up to 500 grams, 700 grams. And, we're showing now in the news releases, we always publish all of our data online anyway, but we're showing just the individual assay by assay intervals off of our highlight drill holes. So what you just saw, that 80 meters of 10 grams, I think it was at about 30 meters vertical depth. That's when the gravel ends. And, you're looking at material in there up to over 500 grams per ton. I mean, to find that going to surface and over such a big target, eventually the market will figure out that there is more high grade gold in that LP fault than they really are factoring in at the moment.
Yeah, and I think considerably more because, I've always quizzed you on the geometry of the deposit, trying to think down the road, how much of it will be conducive to open pit, et cetera. And like anything you would expect, over 4 kilometers so far of identified strike, there'll be pinching, swelling, different geometries, there'll be pits, there'll be underground, et cetera. But what's remarkable to me in what you identified in this last news release is continuity of high grade, identifiable high grade zones, 2 zones that have been traced over 1 kilometer in one case, almost 1 kilometer in another case, open at both ends. And if you can accurately predict and you have that kind of consistency over those lengths of those kinds of grades and extending to depth, which we know in the Red Lake area can go multi-kilometer, to hell with the open pit. You've got a huge high-grade project, underground project that essentially starts at surface there. And the economics of that would be absolutely tremendous.
Yeah, that's what really excites us is, there definitely is a bulk tonnage character to this, because you cannot ignore the fact that you could potentially cheaply access this stuff right from surface. So we're actually looking at points in the project now where we're permitted and we're doing it. We're exposing the zone to the open air for the first time.
Wow.
And we'll talk about that a little bit more when we have more of it exposed. But I mean, that is some cool looking stuff. And, you can't ignore the fact that it is all kind of daylighting, basically. So clearly there'll be a bulk tonnage component on the development, and clearly there's going to be an underground component on the development. And those zones that you mentioned, Brian, like the data that we put out in our last news release, we're re-logging and reclassifying all the drill holes. There's 160 of them that we're up to along the LP fault now. And we're finding that there's a number of these predictable shear zone hosted and these sheared up vein system hosted zones that are along strike. They're laterally extensive, they're vertically extensive, and there's a number of them. We've talked about 2 so far, but you're going to see more in the upcoming news, just as we collect the data and we show the continuity on these things. So really exciting. And that's really the bottom line here is, if you're looking at a lot of higher grade material, all close to surface, all potentially bulk tonnage mineable, I mean, you really have to think about the projected economics of the thing. And I know it's early. I know we haven't even got our maiden resource out yet, but it should be obvious to the market looking at the data that you're going to be looking at something here that has the potential for very good returns and very quick paybacks on investment. And that's really what we'd like to focus on. It's not drilling off a grid over the entire sort of 11 kilometers that we've got test drilling so far. It's defining in very good high definition view the potentially very nice economics over the center of the system. And it I got to tell you, it's looking good.
Well, that tees up another point I'd like to make, because I was looking at there's 3 basic ways I see for Great Bear to end up being a multi-bagger from these levels, these elevated levels. One is discovery. God knows you're doing that. You're turning up a lot of gold. The other is the gold price. This is one of the best, if not the best, bull market environments we've seen. And everything points toward it extending for years to come. The other thing is the premium per ounce, because just looking at it back of the envelope, to me, it looks to me like the market's kind of valuing, although you don't have a resource, in my mind, it's valuing the project at around $100 an ounce or so, or thereabouts. But your peers in the area, in peer groups in the broader market that are prime takeover targets, are valued more toward multiples of that, $200-300 an ounce. So just by a multiple per ounce, you could. The share price, your market value could increase very significantly, could essentially multiply from here. And if there's any place that would, and any project that would deserve a high premium per ounce, a high price per ounce in a takeover, it seems like this would be it.
Yeah, thanks, Brian. It's a really good point, actually. Like one of the, when you found something like what we've found, right? So a big gold system, really big gold system, multi-kilometers, continuous, goes to surface, all that kind of stuff. It really kind of irritates when you see yourself given a really low ounce in the ground valuation. And we're transparent with the data because we want people to see that it's there. We want them to see the grade. We want to see them. We want them to see the continuity. But, we've got neighbors in the district that are valued at over $300 an ounce in the ground, and not large deposits, but certainly like big enough to mine. And we look at that and you apply those sort of per ounce in the ground metrics to us. What we need to do to get from here to get to that point is continue doing what we're doing. Drill, put out the resources, put out the economic studies, de-risk the project. It's all going really well. We've got our, initial First Nations long-term exploration benefits agreement in place. We're doing more advanced work. There'll be more and more news about this going forward. But as we go through those particular check boxes, that per ounce in the ground valuation should steadily rise until it's more like some of the neighboring systems. And Red Lake gets some of the highest premiums in gold mining in Canada. So I think what you're saying is exactly right. Our deposit will do really well in a good gold price environment, but it also doesn't need a super good gold price environment because of those characteristics of location, high grades, and all of that. So I think we're looking at a number of converging factors that will make a big value driver here going forward.
Well, a real big value driver will be the resource estimate. One last question. What's the time frame looking for that?
We still have to drill a couple of hundred holes into this thing just because of the size to define that resource. So as you've seen in the recent drilling, we're drilling off 50-meter spaced drill fences along the LP fault. So that process, I would imagine a couple hundred holes from now, we should be in a position to publish that maiden resource. So sometime next year, I don't know the exact timing, but if things keep going like they are, by the time we're having this conversation in August next year, if it's not out already, there'll be so much data in the public market based on those extra hundreds of holes that'll be completed that everybody's going to have a very good idea what that looks like already.
Great. Well, Chris, keep up the great work. You've made a lot of money for our readers. I think there's a lot more to come. I sure hope so. And I expect so as a shareholder. So I'm still holding a big position. Thanks a lot for everything. And we'll talk to you down the road.
It's really good to talk to you again, Brian. Chat soon.
When I use that term speculation, I guess I am contrasting it with people holding precious metals when they know the capacity for the price of precious metals is only limited. Basically, they just hold it because it's a stable store of wealth rather than something where they would hope to make large gains, as you refer to. But I can see how I suspect you're right that the majority of people do not buy to trade after 30 seconds or anything like that, that it is a buy and hold strategy. Now, you say that the actual use of it as a micropayment is not the key driver, and I have to admit that I tend to agree because, as you say, the conventional or fiat currency processing methods across countries are getting much cheaper and easier rapidly, so it's harder to compete on that quality. So, what about options such as Monero that are advocating, these, what do they call them? Are they privacy coins? I'm not sure.
Yes.
Yeah. Do they have no claim for their value proposition?
They have a little bit of a claim. So Monero probably has the best claim to last for a longer period of time. I think Monero has a better claim to last for a long period of time, even better than Ethereum, because I think Ethereum has lots of competition. And now Monero does as well. There are other competitors to Monero for privacy. But Ethereum does as well. But Ethereum's biggest competition is going to be traditional companies, because people are using Ethereum to build their smart contracts. But anything that interacts with the physical world doesn't actually need a blockchain. So if your smart contract has an interaction in the physical world outside of the digital world, if you and I have a smart contract and I have to interact with you in the physical world outside the digital, then it makes absolutely no sense for us to have a decentralized contract. And using a decentralized layer underneath, and we can debate all day long whether Ethereum is or isn't even decentralized. I'm going to claim that it's not. You might as well do your smart contract on Google or AWS because it doesn't matter. I always call smart contracts a soda machine. A soda machine is a smart contract. Why does it have to sit on top of Ethereum, a very complicated, expensive database? It's not necessary. And that's what happens with most contracts.
You jump to my next question. Obviously, you have a, yeah?
All right, but so let me go back to Monero, and then we'll come back to this. So there is a case that Bitcoin transactions are not private enough. But here is and I understand that case. But here is the slight counter argument, and not that I want to appeal to the government here. It might have been harder for Bitcoin to take off if it was fully private. Like, for example, this company just bought 250 million worth of Bitcoin. And it's a lot easier for the CEO of this company and the board of this company to justify the purchase of 250 million Bitcoin to investors when Bitcoin is not as private as Monero. Now, I'm not saying that full privacy is bad by any means, but it certainly helps when you can make the argument that this isn't straight up ghost money, that this isn't fully untraceable. This is the company saying, look, we bought this Bitcoin and you can audit it. The problem with a blockchain like Monero, because it is so anonymous, it's hard to audit it by computer programmers that are way smarter than me. And I've talked to them and they're like, yeah, look, it's great to transact anonymously, but because it's so anonymous, we are not exactly 100% sure how it functions inside, or how many there'll be, or did someone create a bunch of Monero and we don't know it exists. So there are complications. Now, I don't want to, like some Monero people will say that's impossible, but I have heard, so there are technological complications. There is also some transparency problems. Like, we all want, to be hidden. Like, in a perfect world, us as private citizens have full privacy, but public employees, people that run our government, the tax authority for starters, right? Like the IRS, anyone that works for the government, I don't want them to have any privacy. They're public employees. They're supposed to work for us. We're supposed to see what they're doing, especially we're supposed to see their financial transactions. So the way Bitcoin is handling this is they are putting privacy as a second layer so that the base layer is not that private. But you should have sufficient privacy on top. So if you want to use privacy tools, your wallet, your Bitcoin wallet, would be able to mix those coins for you to give you sufficient privacy. It's not going to be as perfect as Monero, but it's certainly good enough for anyone that knows what they're doing if they need that kind of privacy, and it will become easier and easier over time. And the same thing about micropayments. Bitcoin is going to have micropayments. Again, as a second layer with Lightning, you'll be able to make sub-penny transactions. However, when you build out these things like privacy and scalability and micropayments, you need to do it safely, slowly, in order not to put your three main principles in danger, which is unconfiscatability, censorship-resistant value transfer, and making sure that 21 million Bitcoin is not endangered even mentally. The moment people think that there could be more Bitcoin than 21 million, it literally will crash like 90% in a day. So you have bigger things to worry about. You can't move fast and break things in Bitcoin, because then billions of dollars worth of savings for many around the world is just gone.
Okay, mate. Now, and there's so much to speak about, but just quickly, why? And I'll just say too that it is true, as you say, as a private individual, and let's say many anarcho-libertarians or civil liberties advocates, they really care about that privacy element. But as you said, bigger corporations or larger organizations, they want transparency, in their defense maybe. Now, why do you take a particular exception with Ethereum above others? Because it's had a longer lifespan?
Pretty much. And also because it's disappointing how most people just don't like, they think Ethereum, did something great. They really didn't. Ethereum created a platform for other people to easily print their own money or get around security laws, just like Ethereum did when they started. So the problem with Ethereum is that it suckers people in for a longer period of time. So I believe it was probably around 2016 or 17, back when, remember BitConnect, which is a straight up Ponzi scheme?
Okay.
And I said that BitConnect is less dangerous than Ethereum, because with BitConnect, you know right away that it's a Ponzi scheme. Yet people still got fooled for billions of dollars that was lost. Because the value of BitConnect, maybe not a billion, but hundreds of millions of dollars.
Mm.
And with Ethereum, like, I recognized the similarity from the beginning, but most people don't. So Ethereum continues to sucker people in, and all these other copycats, you know, after Ethereum, there was, well, BitShares was even before Ethereum, and after Ethereum, there was EOS, and now Cardano's coming out, and Tron, and they're all the same. They're all copycats of Ethereum. And they all want to be the layer for people to create their ICOs, but then ICOs became a bad word, so it became STOs. It's all the same stuff. It's how do you create a token to get money so you can build your idea. Whether your idea makes sense or not is irrelevant, because people just want to profit on the token that you created. And I think this is diluting a lot of people. And while at the moment, because again, Bitcoin, rising tide lifts all boats. When Bitcoin goes up, everything goes up. Bitcoin goes down, everything goes down. So now that Bitcoin is in a bull market again, because it spent 2.5 years in a bear market since the 2017 top, it's lifting everything up again. And people are once again rushing in to these altcoin projects and Ethereum itself. And the next Bitcoin correction will wipe them out again. Because none of these projects are, there's nothing there. They all claim to be innovative and creating something, but at the end of the day, they haven't innovated anything. There is nothing there. They found a way to get around security laws up to this. That's the only thing I've seen so far.
And then do you characterize yourself as a Bitcoin maximalist?
I characterize myself as a shitcoin minimalist, but a lot of people call me Bitcoin maximalist.
Okay. Tone Vays is the gentleman we have been speaking with today. ToneVays.com. Follow him on Twitter and his YouTube channel. Tone, it's a privilege, and I hope maybe next time we can get you on to discuss technical analysis.
Sure, I'd love to talk about gold too. It's been on a nice rally.
It has been, and man, we've been enjoying it this first half of this year. So, mate, until next time, Tone, have a great day. Cheers.
Awesome. Thank you.